Good morning and welcome to the ThetaWaveTrader. My name is Darren Hancock and I'm your host for the Breakfast Club. Dun, dun, dun. This is where I like to have the music or something like that. Maybe I should start putting music in. Maybe I should start putting some music in the morning so I have something dramatic so that you people can come in and see quality video performance. But alas, we have a low budget on this here podcast YouTube show. I have my coffee ready. We're ready to tear into the markets this morning. And let's see what we got. British pound. This is my pre-market analysis. We got 9 minutes before everything kind of opens up. So let's look. We're waiting for my buddy Kevin to get his headset in today. I've got the Breakfast Club open, ready for people to pop in. So we'll see if anybody pops in this morning. Let's double check to make sure we're online. YouTube, your channel, live. There we go. There we are. Let's double check and make sure. Oh, there we go. There is a slight delay there, hey? Okay. Gotcha. Now let's How come I can't see the chat on the side? Okay. Sorry about that. I'm just trying to figure out what's going on and why I can't see any chats on the sidelines here. Let me get rid of this and start this again. All right, so no stress trading. Oh, somebody's got called no stress trading system. Yeah. That's my idea, buddy. I see what you're up to. Coach Ernie. I'll show you how to make some no stress trades. Live ICT concepts. Here we go. Here I am live. How come I don't have any I can't see any comments that I can make for you guys. Your channel. All right, I guess we'll go back to the other way. Okay, so let's look at the market here real quick. So, and cut out some of this other stuff. Sorry, I can't see anybody's comments. I can't see that comment piece on the side there. So, I'm not sure how to fix that right now. Let's just get to the analysis. So, British pound. This is the daily chart on the British pound. We have come down into the daily fair value gap here. We've hit the bottom of it and played inside it for quite some time. We've come all the way down. On the daily, I want to kind of prove what we're talking about the other day on Friday. When it was starting to get late on Friday, we were talking about taking this trade here, where we broke market structure to the downside with a nice big bold candle. Then we started coming back, we created that fair value gap. Then we traded into it. So we had a paper trade we talked about entering here. And then we had a specific scale out point that we were looking at for objectives for the day. And because it's Friday, it was kind of later in the day anyway. You look for objective. The first objective for me would have been this first one here. So you'd add 10% there, take a chunk off down here at the rejection block. And I had that posted at 121.23 So that was the objective to aim for later on in the day. If we're really kind of dragging it out, it may, I was talking about how it may just hit a rejection block and then just key off of that and turn around and go back up. It doesn't necessarily have to come into this wick. It could just hit that rejection block and leave. And that is exactly what it ended up doing. As you can see, these were our other objectives that we're aiming for, which was the bottom of the fair value gap yet again. And then we're looking for a price leg down. If this was going to be a price leg, that's where we're going to end up heading. But we were going to scale out on the way down. And I can remove this price leg now because what we did is we ended up coming back into this range that was created on the Friday. And we pulled back into 62% retracement, which is about here. We pulled back down. I got into a trade last night. But my downside objective was a little too low. Instead of just aiming for the order block or the top of the highs here, which would have been a nice place, I aimed a little too low and it came back and it took my stop loss. My stop loss was really tight. So I got out of that. But then, so anyway, this looks like here now. I'm looking for this imbalance to provide some level of support now. This, you want to see this remain open so we get a breakaway and we start head back up. There's no fair value gap here, no break in market structure to the upside, showing me that we've really gone and reversed our direction. So we're still bearish overall. We're still on the outside of the fair value gap on the daily. Does this provide a level of support? And we're going to continue to the upside where we can start breaking these market structures. And then I want to see like a full fair value gap with or a full bold candle that creates a fair value gap that we can get back into, key off, and start moving up for higher prices. If not, I want to see this downside of this hold for support, and then we're going to run out the bottom again, fair value gap opening. That's the classic setup we're looking for to make some money on. So that's where I'm looking for a pound. Otherwise, we're still inside that daily fair value gap range. And yeah, this might be just right off that body there. You see that? Came up, hit right off the body, and now we could start turning around and coming down. So for the short term, the next hour or so, I see this coming down into this fair value gap to revisit the bottom of this. So we'll see how that goes. Euro daily. The Euro daily, I see I had an interesting little trade here on this last night as well. We have a small fair value gap here, which actually seems to line up with all of the weekly new week opening gaps. They're all overlapping each other now. So when they're all overlapped, it looks like the markets tend to consolidate more around them. I don't know. I've never seen these before, so I can't give you any strong advice on this. Again, Michael's still around. You can ask him on his Twitter page there, or his X as they call it now. You can talk to him there and see what they have to say about all these overlapping new week opening gaps. So I see a run back up into here. Does it provide a level of support and we're going to continue further on the downside? Or is this we see a low, higher low on either side? So is this a short-term bottom? I'm not here to predict the bottom. Until we break the top of this candle here, I'm still kind of bearish. So I want to see a big bull candle get above here, create that gap, and get on top of these new week opening blocks, especially this fair fair value gap on the daily above. If we get above that, then I've got a potential for the reversal, and we've got a seasonal tendency for the markets to reverse in October anyway. So this is October, September, October. So we're looking at a potential for the seasonality to be fulfilled in terms of the turn. Go down into the hourly. This was the trade I took last night. So you get an idea of what that looks like. It was a small trade. I got up this morning and it had banged back a couple of times. I just took off a small profit there. It was like $60 or something. I was aiming for overnight. I was aiming for up in here in this order block breaker and the fulfill of this fair value gap, and it didn't quite happen. So it'll probably end up filling there today. Upside, what have we got? There's nothing. I don't see anything here just yet for major return. You're looking for inside the small range we've got here. We're still inside that, around the 79% retracement, so we could start getting a full breakdown to the downside. There's lots of liquidity sitting above. There's a lot of new week opening gaps sitting up there. We have a new week opening gap down here. So if I take this guy and I extend them down to, oh, they're overlapped on each other. So I'm just going to put that because they're overlapping. So this one here starts here, and Friday's ended right there. So we pretty much opened up on the same level. Hence the reason we're finding support around this level, right? That's the new week opening gap. It's pretty much where price is banging off of right now. Now we're running back up to the next new week opening gaps. So you got this one, its midpoint is here. These two, that one further back between here and here is our midpoint. And that one there is those two. Okay, so I don't see a heck of a lock right in the euro just yet. CAD. I took a trade in CAD last night as well. I was here and I thought I can see this closing in now. And I took a trade up high, came down to here. That was like $800 or something. But it was precision. Look at how precise that is. Let's get into the right there. Right on top of that gap. Anyway, let's look at this. So right now we're coming back into this fair value gap here on the day, on the hourly. Is this going to provide support? And we're going to continue down for a fill of this fair value gap here on the hourly. Busy. That happened on Thursday. Last Thursday. So looking here for this, we have a break-in structure, fair value gap. This would be a nice logical place to get a short in with a stop loss sitting up in here. And then continuation on the downside for take a partial here, get inside this fair value gap or this consolidation in here, 50% of the consolidation, and then start running out the bottoms. So this could continue on the downside. That's the high. I'm actually going to take a trade there, and I'm going to stick that one just because this seems to support our level of break-in structure with a fair value gap, return inside the fair value gap. It's a classic setup, so we're going to take that We're just going to aim for a short little pop into here, and we'll see how that rides out. If I start getting a body above this candle in it by the end of the hour, then I'm definitely out. New week opening gap for gas. This is what I was kind of hoping for. We ended up last week with a small little wick candle, and we're inside the new week opening. Nope, not the new week opening gap. The weekly fair value gap. It's in gray. So I wanted to see this just come down, tag this area on the bottom of the new week opening gap, remain open, which is the bottom of the wick, which is the fair value gap that's now created here on the weekly. We have a new fair value gap from the bottom of this candle to the top of this candle right here. That's a fair value gap, and I want that to stay open. Yeah, it can come back in there a little bit just to dip in like it's doing right now. It would be nice to see this fair value gap here remain the ladder for support. We get a wick in here, and then we'll turn around and start to move up for the rest of the week on the daily. So we're just coming back to fill this in. So I'd like to see the support. I think on my next one here, I had this marked out. Yeah. Hang on a second here. I have to have a good coughing fit. So what you're looking for is, last week it was calling for this. Kind of called this to set it up and say, I want to see it return to this price imbalance here on the daily, which will end up being the weekly. Go back to here. You'll see the weekly. There's that little price imbalance. The weekly lines up perfectly with the top of the price imbalance. So I'd like to see something hit right off of that and start to return back to the higher prices. I don't want to be focused on looking at money right now. Okay, so that's the objective today. I'm just kind of looking, keep your eye on this area here for natural gas, and then the retracement off of that. This needs to stay open for me to really be bullish in this right now. Australian dollar. We're still looking for this key off of this lower level. We have a new fair value gap here, and looks like we just came up, tagged the edge of it. Now this could continue down on the downside. We don't need to come all the way back into that inversion fair value gap right now, but if we did, if we just tapped inside this fair value gap that's just been forming here on the daily, we pull back into there, maybe tag the bottom of this larger order block here. If I take from here, watch this. There's 50% right there of all those candles added together. If you go from yeah, I like this. This is a swing here. Yeah, I like this as the potential up inside this range that was created from last week. If we pull back into 50% of that range, that puts us right in here, just above the high of this inversion fair value gap. I don't want to see it quite get that high. I'd like to see it just come off the bottom of this side of it and continue down and leave this open. But it can retrace right back in there. Either way, I'd like to see this remain open to create a nice little breakaway gap and continue further down. Now we've got these triple lows occurring down here. There's a lot of liquidity sitting, building up down here below the markets. That's the Australian dollar. It's always been the weaker of the two pairs. You still have a lot of liquidity back here from August, September with the New Zealand dollar. It had a heavy drop down last week. And then we seem to hold off on this, taking these lows again. We opened, and so that was Friday. Today, looks like we're keying off of this inversion fair value gap, which is what we're looking for on the Australian dollar, it to come back into this inversion. Because Australian dollar is heavier, it may not pull back into that, it may just continue on the downside. Australian or New Zealand dollar has just come back, found some support here. Now if it continues down, look for a run below these old lows here on the New Zealand dollar. So look for it to run deeper into the bottom half of the liquidity sitting below the markets here. Now let's look here. The S&P 500, where are we at here? There's an inversion fair value gap. We've got up through it. Now we've come back down, and we're just hitting the edge of it here. So we've brought price back in. Now we're coming back to rebalance it. And do we key off of this and start running back down? So I want to see if this provides support, or do we just, the new week opening gap gave us the support on a run back in here to drive back up, or, you know, this could be a new price leg. If we have a shift in market structure for the S&P on the daily, and we get a new price leg up, we're looking for liquidity up here. But right now on the daily, I'm looking at this providing, this inversion fair value gap here on the daily providing support. Does it provide support? And do we continue on the downside? We have buy side only delivery here. So there's no, this is all like a fair value gap here. Only buy side, so we have no sell side here yet. And are we pulling back into this range? If we do, the midpoint of this range, 50% sitting here, 62% brings us back into the bottom of the new week opening gap. Yeah, so look for this to provide support, and we're looking for further downside. This is the order block. We're keying off of here as well. So the body has been hit. There's the body there. Wick hits it nicely here. So do we continue down for a further run on the downside? This turns into a negative bearish candle on the daily. Or do we just peter around in here and then tomorrow open up, run up to the midpoint or mean threshold of this order block, and then a continuation on the downside? We have to get above this candle for this candle to provide any level of PD arrays that I can really key off of right now. So I have to use the underlying PD arrays like the monthly and weekly. These are weekly fair value gaps. They look like my blue ones, but they're not. These are the weekly. It's because you overlap it with the gray and it turns blue. So yeah, we'll keep an eye on that. So let's go down to the hourly on this and see what we see. There you go. So we've almost got a full fill of this fair value gap here on the hourly. If it does give us a run up one more time and tag this, that's fine too. And then the reversal for more downward pressure overall. Got 15 minutes before the 10 o'clock.
Hello, good morning.
Hey, good morning. Is this Kevin?
Yes.
Hey, how's it going?
Great stuff.
Excelente, my friend, excelente. Do you have a good weekend?
I did.
Excellent.
Up in the city, some people dressed up.
Oh, yeah, how was the Comic-Con?
It was good.
Yeah.
Packed. Good people.
Oh, I bet it was just loaded. Big convention center, thousands of people.
Yeah, definitely a lot. Like shoulder to shoulder constantly.
Oh, nice. That must have made you feel uncomfortable with all those people in such close proximity because you're trained to have people stay back.
Yes.
Yes.
Yep.
Yeah, I hear you.
All right, let's see.
So we're looking at the, I'm just kind of doing a pre-market analysis that's kind of dragging out here. I couldn't get for some reason I can't get my YouTube to look at any chats on the sides. I don't even know if can you see a chat piece on the side of YouTube right now, or is it all black?
I see it, yeah.
I don't know, maybe I'll have to cut out of that
I just wrote test in there so you can see it.
and I'll put in just regular YouTube.
All right, so what do you want? US 30 here? Oh, S&P.
Yeah. No, I can't get any, top chat. Live chat. Ah, there we go. Pop out chat. All right, now I see it. Test. All right. I had to scroll down to get at it. All right, so we're looking at S&P 500, looking for a possible upside run to fill this fair value gap here on the upside. There's a small little piece left there. Oil. Yeah, I don't see much in oil for today. We're looking for this to provide a level. It just popped up above that weekly, but it also came up and filled that fair value gap there. So we could see downside now. I want to know if this weekly fair value gap is going to provide a level of support. So look inside here for a level of support. So if we go down into the hourly. Level of support would be the bottom of that, which would be the fair value gap sitting there on the hourly. Yeah, I got nothing here. I don't see any major, we're consolidating, so I don't see anything major for upside or downside. There's lots of pockets of liquidity all the way down, and we've run out the high. We filled that fair value gap, so this would be a nice opportunity to look for a return, a fair value gap to form in here below this structure, a breaking structure to the downside, and then start pushing back into this range here, then start aiming for 50% of that range. I think would be a nice little trade today if we could see that forming. So 50% would bring us right below these old lows here, fill in the rest of that fair value gap to precision. 62% puts in another little level here back to this large 3-candle, 3-hour breaker. Last big candles before a run above old highs. So we'll keep an eye on this over the next hour or two and see if that actually runs back up into creating something for a breaking structure to the downside or the upside. We have neither right now, so I'm not touching that one. Gold's giving us the same thing. As you can see, there's your fair value gap. Is that pink or gray? That's gray, right? That right there is your high. Look how precise that was. That opened up this week or today on Sunday right there, right on precision. And now it's pulling back into that range that was created from the takeoff after the Hamas attack. Or we're going to call it after the war. I'm not going to pick a side. After that a little incursion that happened. We have a pull back into the range. So now, are we pulling back deeper, or are we just creating a new fair value gap here off of this level? This now becomes inversion. Now that we've gone as a SIBI, we've come through it. Now we've come back into it. Does this provide a level of support, and we can start pushing for higher prices on gold? So I'm looking at that one. So what do we see here on the hourly? Yeah, they're kind of bouncing off of this one here. We have no break in structure yet. Yeah, I don't see, if anything, we get a return into this here. Does it provide a level of support, and do we continue down? I'm not super sure either way. If we take the range from the top to the bottom here, we've already come back to the 62%. Also the new week opening gap. That was your level of that you want to provide some support there on the way down. Yeah, I'm not sure about that one yet. It's Monday, so we're just getting a feel for the market right now. We've come back into this order block. We've broke down below it, come back inside it, inside the wick. Now we're pulling back into this range. Do we get 50% of that? 50%'s down here. So look for 50% of this range to come back and refill. On the daily, what does that do for us in terms of in here? We've got this inversion fair value gap. It's occurring in here. From here to here. And then you've got the so this is an inversion here. So I'd like to see this provide some support. We've got to run back into this range from here all the way down to here. So 70%, look at that, 70, 75, and 79%. They all seem to line up just perfectly inside that inversion fair value gap. Coincidence? I don't think so. I don't think so. Or maybe we're waiting for the board meeting and everybody decide to run it back up there and stop it right there. Who knows? So just because there you see a wick here, you think that's a nice little pull away. It hasn't really reached for the higher objective, which let's say it was right there. Right there. 50% of this range, or this SIBI here, is sitting here. 62% is just above that. But we don't look at 62, 70% retracements. We look for 25, 50, 75, and the full fill. So we still got some more upside to go to there, because 75% retracement is even right up into here. So we got more to play with in there. Let's go back to British pound here. So British pound, so we're back inside this imbalance here. Not much I can do about that. If we're in the imbalance, we've come back and we filled this little fair value gap. I wanted this to stay open. And here's that example I was giving you last week, Kevin, about when you see this break in structure to the upside with a body, but you don't have a fair value gap that supports that above price. It shows more, for me, it shows more weakness, because we have a fair value gap. You see how this fair value gap occurs below the swing? And if we had a swing, this fair value gap with a big bold candle and a fair value gap that occurs above the swing, those are, to me, are much stronger in terms of their support of running for higher or lower prices. For example, you see a break in structure here. We have a swing point. We have a break in structure. We have a fair value gap that's actually below it. We come back into it and we break away really quickly. So when you see these kind of possibilities, like this is a break-in market structure here and the fair value gap occurs behind it, we come back, a deep retracement back into it before we went all the way back down. So it's not that they don't continue to the upside. They're just, to me, they're more, when you see a break-in structure like that with a big bold candle and a fair value gap, look at that. It just takes it, tells me the direction it wants to go. Same kind of thing, break-in structure, fair value gap above. We return into it, boom, and we're off. And we still leave a piece of it open at the bottom. So something to kind of keep an eye on when you're looking at these fair value gaps forming. You want to get as close to or above this highest up close candle. If this, especially if this is a breaker, you want this fair value gap to occur inside this breaker or above it, so that when you come back and just tag the top of it, it's a lot more stronger for an upside position. At least that's my visual observation. This, you might want to put your mic on mute, Kevin. You're rolling around on it or something.
I'm trying to switch back and forth. I hear your voice, but then the video, is like 8 seconds behind. So I'm trying to.
Is it really?
Situate. Yeah.
Yeah, you might have to
share your screen through Skype.
No, I share it through like I'm video recording it through
OBS.
OBS.
Do you also share it through Skype?
No.
Oh, okay.
No. I wonder if that would make a difference.
Yeah, because Skype should probably be live, and then it should still upload to YouTube on the delay. Because I hear you live, obviously, but then the video feed that I'm watching through YouTube is like 8 or 9 seconds. It seems to be off. So I'm kind of trying to figure out where you're looking as you're.
Oh, okay. Well, let me see if I can.
Some other point.
Let me see if I can share my video with you then.
Oh, there we go.
Now, can you see that on your Skype?
Yep.
Can you see my thing moving around quick and easy here?
Yeah.
Okay. Yeah. All right. Now, I don't know how much that helps us out on YouTube, but that'll be great if it does. So anyway, so what you'll see here is, this is what I was pointing about, this fair value gap right here.
Okay.
When that's below this price and we have a break in market structure to the upside, I want to see a big bold candle take off above that. Yeah, the body's got above it, which is my general rule. I want to see a body get above it, but I want to see a body with a fair value gap of forming above, not below the break-in structure. For example, we have a break-in structure, fair value gap above. We come back, we tap it, we start closing out on the next swing points. Comes back in, fills, leaves a chunk open, and we have the same kind of principle happening. In here, you don't see it. You see how the fair value gap's below it instead of above it, like you saw here. When it's above it, to me, it gives a lot stronger indication that it's got a takeoff potential. Now, this one here just blows that theory all out of the water, because now we have a fair value gap that occurs above a swing, and we just get, it comes all the way back down into the lower portion of that before it finally runs back up. So if you're looking for a quick run on liquidity, you've got nothing. So that, I guess, clearly doesn't work all the time. But that's my general rule. I like to look for that. Be really cautious. Cut your leverage down really low before reaching for higher prices if that's your entry level. We're just coming off of the bottom of this price imbalance again now to run back up or fill in the rest of this fair value gap down here. This is where we were talking on, remember I was mentioning on Friday about the rejection block, and I put down the objectives being these three objectives, and late in the day I said be careful about rejection blocks. Can be the only place it comes down and tags and then leaves, and that's exactly what it did. It came down, just hit that and left for The rest of Friday it pulled back into the range and then opened up yesterday and continued back into this price imbalance that we have here. So we may have further continuation down into the fair value gap on the daily. Not sure. We're in a consolidation right now, so where do we go here? On the 1 minute. I don't really see a heck of a lot here. Nothing, nothing clean. There's some small little pockets of liquidity down here. Back to the order block right here. There's a small little tiny price imbalance sitting right in here. Do we get support there? Oh, I still got a trade on, don't I? Oh yeah, I do. This British, oh, this guy here. We put this one on earlier. Okay, so we made some money there, and now we're in this one here. Now I'm going to move my stop loss to 0 stress. While I was babbling away there. So we're inside this. I'm looking for this to fill here. So this was the setup I was talking about this morning during my pre-market analysis, but it looked like a perfect opportunity. We have a break in market structure with a fair value gap that occurs below the market. It came back into it, so I thought, oh, I'll take it right there. So I took it short right there because of that very reason I just finished explaining about fair value gaps occurring below a swing, and then we come back into them. They provide a level of support. Then I'm like, I'm all into that.
Feed the wolves early.
Feed the wolves early, man. Yeah. So if that revisits the top right here, I'm okay with that. I don't want to see it come back up to the top of this again. But this is Canadian dollar. Even though I'm living in Canada here, this is not my favorite currency to trade. It is so unstable, especially when it comes to oil. And what's oil doing right now? Still coming down, so I'm probably best to get out of that. I'm just going to close out, take another little, that was a 800, and that was a almost 400. That's not bad. But again, doesn't really matter about the money. It's about the trade and how the trade setup was there. It was available. Then be bold enough to take it. I was listening to much of Michael's stuff the other day, and it was like he was talking to me about follow through with your trade idea, trust your trade idea. I think because I've beat up so many times in the years trading live when I shouldn't have, that it develops that psyche that you get, and you end up being afraid of, and you doubt yourself. When you get really good at it, you start doubting that that is possible, and you doubt that you can actually, you deserve to make any money, right? You think, no, I've trained myself to believe that I'll never make it. It's a weird kind of psychology to get into. But then you got to start believing it, because you've got to find a way to switch that up inside your mind. Once you've proven it enough times that you see it, you can take it, do it. Euro. Got in on a euro trade this morning as well. Like last night before I went to bed, I kind of dropped a trade in to go long. And I got up this morning and it was coming back down and tagging a bunch of times, so I just got out of that. It wasn't until I actually dropped in the new week opening gap, which is sitting right here. There's not even a gap. That's just the bottom of this candle here and the opening of this candle, they pretty much overlap. So you can see how this is an area of sensitivity, this whole area right now where this price, the new week opening gap began. So we're back to it again. So we just keep tapping it. So until we start to see a breakout moving in a different direction, there's not really a heck of a lot I've got for this one. My wife's just let me know she's made it to school. All right. So not a heck of a lot in here, even in terms of the hourly. I don't see much there. Good thing we're getting out of here just because the oil looks like it's going down, which will make the price of Canadian dollar against the American dollar. The American dollar will get stronger against the oil going down. So we're not going to really get a lot of push. We might come back, just find a level of support here now, and then continue on the downside. Daily gas, we're just hitting my objective from last week. That price imbalance, we're allowed to hit that. Then I want to see it react off of this area right here. Aussie dollar, equal lows, looking for support off of this to continue down. New Zealand dollar, we've already found support off of that. Now we want to see it continue down and finally take out its August, September lows. S&P 500, we're now back into the daily fair value gap. We still got this upside right here to do. One little punch up here, and then we're looking at the low, the open, and the mean threshold of this up close candle here, which is a breaker, last up close candle before run below an old low. So that breaker right there, I want to see that provide a level of support, and then we can continue to move on the downside back down below these old lows if that's our choice. If we end up eating through the threshold of this candle here, look for upside and look for this further upside of this fair value gap here on the hourly, or a fill of this daily fair value gap. We're at 808. What do we got on the 1 minute? I don't want to force a trade that's not there. Here's the 7, there's your silver bullet entry right there, 1700. That's 10, 1001, 1002. There's your fair value gap that occurs there. You're inside a full fill of it and you're gone. So that's the silver bullet entry right off of 10 o'clock. I'm going to wait. This is way too sloppy for me, but that is technically the silver bullet entry. But how do you look at that and say, there's some good PD arrays for me to hunt for inside this range? So I've got, I think here, and I go, okay, am I above this candle? No. Well, where's my next up close candle that I can get on top of, which is this, or the down close candle, next upside objective? Well, I haven't quite broke that one, so it's not that one. That one's not validated yet. That one's not validated yet. This one finally got validated here, and we're inside it already. So the best you have is the midpoint of that candle. So you have that right pretty close right there. So I run out of PD arrays and I have to go really hunting back to find something that supports. Where are we actually below a candle that's actually been validated? Here's that ugly truth that happens with, if you don't take this silver bullet entry right here and unload your position below lows. Here's why: if you don't set your pay the trader mentality, you just got your ass handed to you right now. There's your silver bullet, and if your entry, your stop loss is sitting right there, this spread just took you out. It would have literally taken you out right there, even though it doesn't look like it's going to do it. Look at the distance between here and here, and the distance between here and here. that totally would have taken you out. So had you not paid the trader, which is what we like to teach here, is get out of here. So from your entry here to here, that's 3 handles, not a lot, 3 handles. The next one down here is 4 handles, and if you don't have that, then you will move, as soon as you get to this one, you move your stop loss to break even. So if it does come back against you like it did here, at least you got 3 handles out of that little play. Not a lot, but if you're going to take that play, find a way to protect it real quick, and that's how I would do it anyway. Does that make sense, Kevin?
Yeah, I was just watching. I'm like, oh yeah, okay, I see. But I had myself on mute, so I'm not.
Oh yeah, no worries.
The hims and haws, you know.
So now we're looking at that. Remember I was telling you about 12, the 12 minutes after the hour. Here's a new fair value gap that forms, and it's a new potential. What do they call that? The silver bullet. So we've got another one up here. We have a break in structure, fair value gap. So changes. See how it changes after that wiki kind of first minute, the first few minutes, 10 to 15 minutes of the trade. You got the wick starting to happen. Now we've got the intention of what the algo is up to. Are we pushing for higher prices? Now, ideally, I'd like to see this happen and then us just to open up right here before it takes that high out, come back in, get me an opportunity to get on, and then start running for that old high so I can pull my stop loss quick, make a little bit of profit, and then wait. Or put it below this fair value gap down here and make sure this is a breakaway gap, measuring gap, and continue on. So this is kind of good right now. What I want to see, this is the same setup we took earlier. If with this for the next few minutes comes back and tags our objective, which it looks like it's off and running, that's why you're going to be careful about the first silver bullet after 7 o'clock or after 10 o'clock. You better protect yourself quick, because if you're wrong, if it's wrong, as in this case, you wait 12 minutes after the hour and wait for the entry to happen around the 12-minute mark. Wait and look and see what happens here. There's 10, 11. And as soon as I see this happening and I see that we're starting to break above here, fair value gap still below it, this one, I go, there's 12 right there. Boom. We have a fair value gap forming above. I like it. Now, if we come back into here, we're going to take a very small trade on this, and we're going to go long for upside objective on the daily. So we'll see if this works. So there's your silver bullet 1. Oh, that was it right there. I think I just missed it, but that's okay. What's the low of this candle here? The low is 63.74. The low of this candle here is 63.74. That was the entry right there. But that's okay. It's the beginning of the week. I don't have to go rushing in, taking every trade we see. Are you one of those coffee morning starter, Kevin? You need your coffee in the morning before you can think straight?
No, my coffee's at like 10:30 at night.
Trying to keep you awake. Yeah, I've had
Right
them.
before I get to work, yeah.
Yeah, I've drove down the highway, the ambulance, and you sit there and you think, oh, I've got to pull into a 7-Eleven or something. I need some coffee. And after a while, coffee didn't do anything for me. And that's do these long shifts where you're driving back and forth to the city, taking patients back all the time. And you gotta tell your partner, you gotta keep talking to me, man. Keep talking to me while your partner's face up against the side of the glass, just trying to get any sleep they can. Oh, it's terrible. We had a pregnant woman giving birth one day, And she was in the back, and I was driving. My partner was attending, and I was so tired. I had to stop the ambulance, get out. I was throwing snow in my face. I'm slapping my face. Like, come on, stay awake, just to get her. I thought, I'm going to kill us all if you end up losing some sleep. It was brutal. Yeah, lots of times you had those long runs where you just keep going and going and going. So that was the right there was the first entry, and right there, see how there's that little swing point right there? It creates a swing. As soon as it reaches that, that's a scale out. I always look for a swing to scale out at, so you'd scale out a little piece right there. Move your stop loss now right up tight with this guy here. So this would be a break-even trade, and now we'd already be scaling out 10% of our trade. And if it continues up, then you look further back here for more scale out points. I'd like to know one day what would be the likelihood of this being, if I get in that habit of always scaling out above the first little swing point that I see, is that more reliable than just saying, hell with it, just let it ride, and if it comes back and takes me out, who cares? Would I have made more money in the long run, or this disciplinary approach to every scale out point, I take a 10% run and break even and go to a zero stress trade?
Let it run and cover the cost of the commission.
Yeah. And
Pump it up just a little bit, 2-3 pips, and then let it run.
Yeah.
Target.
Yeah. I think in the end you'd probably lose a lot more trades, where you'd see it go up and it come back down. You'd lose a lot more trades, but you wouldn't lose any money because you'd at least be broken even with the cost of your trade, right? Your commission.
Yep.
Using that method.
And then that one that ends up getting legs and really takes off quick.
Yeah. Oh, you got that cool accent. It takes wolf quick. I love it. I'm going to have to bring out my English accent just so I can chop it up with a bit, Look at that. That was a perfect entry this morning. I didn't take it, missed it, just fraction. So it came down, hit the top of our fair value gap that we're looking for. And that's the exit, right? That's where the bot would have been just beautiful right now this morning. The bot would have hit that. That would have hit it right there, and maybe on that spot right there. No, it wouldn't. There's a spread. It would have hit at least the beginning of that one. It does a wild card, what I call a wild card entry. So as soon as this one opens, it takes that trade automatically, because sometimes it never comes back. Like as in this case here, it would have seen all of this, and as soon as that one opened, it would have taken a trade right there, and then it would have set 3 trades down there, and they wouldn't have gone in. But you would have been fully on a run with this one. Same with this one here. Would have put an entry in there, and looking for an entry here, it wouldn't have it would have just, you would have 2 long runs going in there, and it wouldn't have got anything on your fair value gap entries, and then they'd start scaling out at whatever time frame. So 1712, man, I tell you, it's a magic number.
I'm waiting for something to show on pound. Gold.
Yeah, what is our gold doing? Gold hit the top of the, or the bottom of the monthly fair value gap, and it also hit that new week opening gap a couple hours ago. So we're between this month's fair value gap and this month's fair value gap. We're kind of stuck in between the two. So unless you think you can make a lot of money inside there on an hourly, not worth touching. There's a ton of liquidity sitting below here, and there's a small little fair value gap that has not yet been filled. So right now we've come down, tag, taking the same kind of trade we just talked about. This, you see this right here? This is that little fair value gap that we now got above with the body. We came back, we tagged the top of it beautifully, tagged the top of it, now becomes an inversion fair value gap, and we're reaching for a higher time frame objective. So just that alone, from there, as soon as it came down and tagged that, you got in from there and you're aiming for the upside objective, you would have had literally perfect entry, perfect exit, done. And if you were leveraged at 5 handles, that would have been a sizable chunk of money. And you'd be set for the week. You could go off and say, well, I've made my money this week, go golfing, go spend it. That would have been a beautiful entry. So now we've just run up into order block threshold. The bodies respect that. Let me see where, let me blow this up a little bigger. See how the bodies of the candles are inside that threshold? I think the bodies are just broke through that. Yeah, just tapping through it. We've got lots of liquidity building up here and here. We're above this range now, so we're extending this range. Is there any inversion fair value gaps to key off of here on the 1 minute? Nope, except for way down here and right here. Lots of chop. Sideline that baby. Sideline that one. Oh, look at that. That did exactly what we just talked about. Remember we said on this last time when I got out here and said, okay, if it comes back up, I'm fine support at this and get short again. Look at that. Right off the bottom of that, and we're going short. So you could literally could have got this, got out, come back in here, get back in again, go short. So just that run by itself would have been another $300 from there to there. So you see how these inversion fair value gaps can provide some really, really good support for quick scalps. This is where you're going to stay in one of your charts. This is where I'll try and stop hopping around on my charts here. Who was the guest speaker at the Comic-Con the other day?
Oh, there was tons of them. Chris Evans was there.
Oh yeah.
Yeah. I don't really ever go sit in the panels because I'm not much of a TV person, so I don't ever really watch any of the shows.
Oh, okay.
We just go for it's a day out. See everybody dressed up, walk around.
Yeah, yeah.
So I've gone like 7 or 8 times.
Wow. I'll bet you some of the costumes. I think we were down in Seattle, and they had a Comic-Con there a few years back, and the costumes that were going down the street, people were like full-on Klingons. You're like, oh my God, that guy looks like a real Klingon off the show.
Yeah.
Like some of them are just amazing.
Definitely put time and effort into it.
Oh yeah. Yeah, yeah. All right, so we're still looking for this downside objective here. Are we going to hit this one more time? I'd like to see. Where can we go here? What's on the 30-minute? Let's see if we can zoom in on something that's going to give us. Oh. Yeah, this would be one of those, if it comes back anywhere inside this thing one more time, your stop loss can go above that. This is trying to squeeze a trade out now. I don't want to squeeze a trade that you don't really need. Yeah, this is consolidating. It's not really taking off the way you want it to take off, so I would say leave it alone. You're all live now, aren't you?
Yes. Yeah.
Excellent, excellent. So these guys are. I'm just looking to make sure that these prop firms, the different types of prop firms that are out there, because there's some bad news about some of these guys. They're
Yeah.
folding. They're not
Definitely
allowing.
are. Yeah.
So if these guys are following through with what they say, and you're with Bespoke, is that it?
But yeah.
So if you can get these guys actually following through and saying what they say and meaning what they mean, then that's great. So you just got to wait for your first refund once we get you some more cash, right?
Yeah. Gotta wait the 14 days.
Now, do you
Once I
have
get
to?
the refund back, then it's fine. Then if I don't get anything further, fine. At least I got the refund back.
Right, right, yeah, absolutely. So do you have? Do you have
If
to?
anything, I'm learning more discipline. I'm like just not taking trades just to take them. I'm like, is that the silver bullet? I don't know what's the bias, what's this, that, and I won't take a trade if I'm not totally 100% on it. And I'm like, no. And then I just watch it play out. I'm like, all right, I was right, but I wasn't sure I was right. And then I learned. So I'm like, all right,
I'll
wait till the next session.
That is so good, man, because a lot of people don't take stock of what they think and how they think before they make a decision.
Yeah.
And if you're looking at this going, I'm not sure. Well, if I'm not sure, I'm not taking the trade. And then if you end up saying, oh, I was right then, okay, but I wasn't sure. So you're acting off of your ability to doubt yourself. And if you're doubting yourself, then don't take the trade. You're not ready for the trade.
Yeah, exactly. Yep.
And that's an excellent, excellent self-analysis tool that a lot of people don't use. If you're not listening, I get back to my paramedic thing again. Whenever I had students come into the ambulance and they'd make a decision about a call and they'd say, oh, this patient's got asthma, let's start pumping them full of Ventolin, which is a cardiac, it stimulates your heart rate to go faster sometimes as it's drying out your lungs. And you go, oh, okay, well, what makes you think this is asthma? Well, I can hear some squeaks and crackles inside their chest. You go, oh, okay. Do you notice the big pale skin, the pain in the chest, and the crushing feeling in his chest? Yeah. Okay, well, what's that more likely of? What's he going to die of first? He's got a couple of crackles in there. He's still satin really well, but he's got this crushing pain in his chest. What else could this possibly be? Well, it could be heart. Yeah. And which one's going to kill him first? Well, let's deal with the heart. And maybe it's just called cardiac asthma, right? It's actually not asthma. So then it's not beating the guy up on the fact that he made the wrong decision. It's like, what was the decision, or what was the point at which you made the decision to go down that path and eliminate all other possibilities? And it's that process that we take to make a decision, and not just beating up on the decision that you made. It's what you did just before you went down that road. What were you thinking, and what was your thought process? And when you understand that, you can really break down a lot of reasons why people make decisions, because they're guessing, or they're saying, well, I just went with the very first thing I heard. I thought it's asthma, so I'm going to go with that. You say, okay, well, what kind of question can you ask yourself right at that moment? Is there anything else this could be that would be more serious? What if you ask yourself that question at that point where you made the decision that it was asthma? Well, one more serious one would be heart. Okay, could this be a heart thing? Well, yeah, it could. Well, what do you need to do to go down that route? Eliminate all the worst type situations first, and then if you're right with the asthma, you can go with the asthma, because that's not going to kill him right away, right? So it's just a matter of inserting that simple question, like, what else could this be that would be more serious? And
yeah, I'm long on the pound.
Yeah. Oh, you're long on the pound.
Long on pound.
You went in?
Yeah.
Where?
I am in at 2166.5.
So you got in down in here, 2166.5. Oh, you're right off of here.
And now just made another fair value gap right there. I go in on the 5 minutes.
Oh,
I noticed my 5 minute fair value gap, and then I go down to the 1 minute. It seems like you always find your fair value gap from the 1 minute.
Yeah.
But I'm not like comfortable with that, so I always look on the 5 minute first, and then I go work my way down. I don't do the 3 minute.
Yeah. So do you, when you see the fair value gap form, like as soon as you see it, because it hasn't formed yet. That's not a fair value gap yet. It looks like a fair value gap, but all the time this candle is forming, you can't conclusively say that's a fair value gap yet, right? Because if that turned around and whipped down all the way back to here, then that wouldn't be a fair value gap until the next candle forms. Then that's the fair value gap. So you jumped in right at, you must have been in on this candle if you're 2166. You must be here. Yeah, I can't even see your fair value gap there.
The 25th minute.
25th minute, 25.
On
See,
the
right there. So you went in right on the opening?
Yeah.
Wow.
25th minute, 19th second.
Okay. So where are you aiming for? This? Or are you aiming for up high?
I got the London high at 21,782, which looks like it's going to going up there, and then the I think that's well.
Okay, well, you definitely got yourself a, I don't see a fair value gap that you hit, but you definitely got in on a nice little run up for sure. There's your first objective, the close of that fair value gap. That's great. If you start aiming for here and here. This is where you do that thing you were mentioned about, just pull your stop loss now to cover your commission.
This is where I just say I cut it completely and move on to the next day or move on to the next trade.
Good for you. So there's your rejection block. Are you still in this?
Yeah.
Oh, good, good, good. All right, so rejection block is potentially another objective. It's the top of your fair value gap daily. At least you can move your, there you go. At least you can move your stop loss to break even. Oh yeah, you're going to do really, really well here.
Is it going to keep riding? See, this is where I say, I look at the,
yeah.
I stop looking at the targets and I look at the money and I say,
get out.
We're good there.
Good. Yeah, let's do it.
And I'm out.
That's awesome.
665.
That was your profit?
That's a live account right before this fall right here, for this red candle. And now I say, we're done with that, and I go look for something else because I got a half hour left, and if not, I call it a day, and that's how I got to fund it.
There you go, ladies and gentlemen. You got to see how a guy who's just starting out with ICT stuff is making his money.
But now I got to go back and see, because I got to check the time. Did I read off the wrong time? Let's see.
Yeah, because this has still got another minute to go.
17:25. So
yeah, you literally got in on this.
Then I got on and seen something that wasn't there because I got 25, 10, 25, 19. And now looking at the 1 minute gap, there's not.
Yeah, I don't even know what you're looking at there, but whatever you got in on, I didn't see a fair value gap there, but you got in on a perfect time to get in, and you ran.
See, right now I can't. Yeah, because now I'm looking at 3 minute. I don't see anything on the 3 minute. Now I'm on the 1 minute, and I don't see anything. So that was just pure luck because that wasn't even a successful trade. I can't even feel good about that. $660, but it's not. That's a pure.
That was pure gambling.
Luck trade.
Yeah, that was like a lucky.
Why did I get by?
Yeah, that's all right though. You put your $600 in your pocket. And say, I can't believe I made that. I don't know how I made that, but good for you.
Yeah, but what did I see that I went on the trade when there's nothing there?
Well, you know what? Sometimes here, this is what you may see. When you first saw this candle open right here.
Was I on the 10 minute? The 10 minute, maybe I was on the...
No, that's not even finished yet either.
It's not even finished yet.
So
what did I see?
This is what you saw right here. When you went in right here, this was a gap. This was a space in here before that wick came all the way down.
Before the candle closed.
Yeah, before that wick went down, it opened and you saw that and you went, ooh, that's a fair value gap. And you took there,
without
it wicked down
closing.
and then left. So it hasn't closed until it
Oh,
got up here,
I'm
right?
sweaty right now. Wow. That
Yeah,
shouldn't happen though.
Most
That's
people
not a
sweat when they're
successful
making $600 in a day. So you just had a 1 minute sweat.
But that's not. I can't even. That's not even like.
That's not even a setup. No.
No, that's not even a successful trade because that's. I shouldn't have done that.
That's okay. You just saw the fact that you recognized that you took the wrong trade. You made some money on it, so this is a great lesson to learn. Now that's a fair value gap. Now that's a fair value. Well, this isn't a fair value gap, but this is certainly a fair value gap now because this candle is closed, and now we have an opening. So if you took this one when it comes back into there and you went long above these highs, that would be an entry for a 5 minute fair value gap, right?
Yeah. See, now I think this is my problem with what I said to you on Friday. I think I only have 3 charts open right now. I have gold, pound, and NASDAQ.
Mm-hmm.
But I think I switch from the 1 minute, 5 minute, 15 minute, and I'm constantly jumping between basically 9 charts in a sense.
Right.
That I'm not focusing. I mean, I'm finding. I don't know why I made that move, but I need to stop jumping and just stick to one. But then, like you said, then you miss something that's could be a setup somewhere else.
Right. If you know what
But I need to
your setup is,
constantly stay on the same minute.
yeah.
So I always do from the 5 minute, and then I go to 1 minute for my silver bullets.
Right. Nothing wrong with that, because he says when he describes his silver bullet, a silver bullet occurs. The way he wrote it down, I got it written down on my screen here. He says between 9:30 and 10:30 a.m. New York, the first fair value gap you hit in this time period is the most crucial. That's how he described it, and I wrote it down, and I was like, okay, it's the most crucial. The 9:30 one. Well, that was like.
So does that mean it has the most strength to succeed? Is that what he's implying?
I think that's what he's implying. But we found that candle for 1612 or 1712 is your I think the most likely one to occur. The first one, yes, you can get some money off of it, but you better be prepared to take 3 pips or whatever you can off of it real quick. And he says it occurs in the 30-second and 1 minute charts. So you're finding it on the 5 minute chart, right? Nothing wrong with that.
Yeah, I first find my 5 minute, and once there's a fair value gap formed on the 5 minute, then I go to my 1 minute, and then I
look for your entry.
Look for the entry there on the 1 minute.
Yeah, nothing wrong with that, man. That's a good, solid strategy.
But most of the time, wherever the fair value gap is, I just mark it right there at the entrance.
Right.
Or at the bottom or the top of the wick. I don't usually do the 50% of that fair value gap.
Oh, yeah, okay.
Because I feel like I'm already late by doing the 5 minute, then going to the 1 minute.
Right.
Whereas if I was just doing strictly the 1 minute, I'm able to find it faster and get in. So I do my entry on the target or on the top or the bottom of the wick of the fair value gap.
Right.
You follow?
Yeah.
I don't know if that's the best, but it's been working.
Hey, if it's working, it's the best. It's the best for you, man. That's what all that matters.
Euro shot up. Cross that out. Oh, JPY went on a little run.
Oh yeah, I want to look at. I got friends of mine wants to do something with British pound. Is it British pound and? Oh no, it's Canadian dollar and Japanese yen.
Ooh, one of the exotics. The spread on that's probably
not. See there, it's Chippy. US CAD. Let me put it in here. CAD, Japanese yen right there. What's the spread? Oh, it's a long. You get paid for a long on a swap. Oh, the spread's floating, so we'll see how big that is. Okay, let's add that. Oh, that's not bad. Okay. Breaking structure, come back up, get in here, right off there. Yeah, that would be a short right there. Structure to go short. I'm just going to put a paper trade on that. Right there. Stop loss will be up there. Scale out a piece here, here, and here. And that would be a long. They pay you a long if you held it over. Here's a great example. Break in structure. Fair value gap forms above break in structure. You come back inside it, and you're off to the races. Fair value gap occurs below it. Look at that big sweep in.
Oh, that's 940.
I'm going to leave that one there and just see what happens. Oof. You had a nice run up there, boy. If you're still in that, that would have been a nice...
No, I closed.
Yeah.
I don't say, you know what I mean?
Yeah.
Like,
you got Lady Luck on your side today, man.
Exactly. I'm not pushing it because I shouldn't have. I don't even feel great about it. Sure, if I get cashed out, I'll feel good about it then.
Yeah.
But currently, I don't know what I see. Like I said, that could have went the other way, and
Oh yeah. Yeah. Okay, well there's the fill of the upside. That was the upside objective. This is that point about leaving your trade in and trusting your trade. It would have came down a bunch of times, then finally shot back up, aiming for my objective. But that's a lot of chop. That's not clean for me. Is the daily bouncing off of my spot? Yeah, it's come in there, it hit it. You can see that leave there. That's not doing anything. That's not doing anything.
wow, that was a busy chart.
This one here, yeah, I've got an indicator on there, and it does a million things. Like the indicator, look at the shit this thing does.
Oh, that's the Lux Algo one.
Now this one's the smart money structure concepts. Look at all the shit this thing does.
Oh, wow.
These are all the different levels that you can set inside this thing. Like it's an insane, and it sends you alerts and everything. But it's really, a lot of it is based on a lot of Michael's concepts in terms of looking for things like fair value gaps and stuff. This is just overlapping pink, and then I've got all these other colors in here, and I'm colorblind as it is, so it's a real pain in the ass for me to see it and tweak all the colors and stuff. It's a great indicator, don't get me wrong, but you got to be really know what you're looking
busy.
at. Yeah, it's super busy. I like this nice clean charts that I got my fair value gap on my daily sitting right there. I can see it. It's nice and blue. And then I just play with whatever else is left. If I think that this has got some value to it, then I want to see this thing hold. You just draw in a simple, because you're on the 1 minute now. We want to see this hold. And then you got one forming in here now. Once that one closes, it's a fair value gap that occurs below the swing though. So are we going to go down? Oil. Oof. Boy, did oil ever. Okay, so with that, there's that hour. So we want to see that break-in structure to the upside or downside we were talking about. Well, here's your downside break-in structure, but it's body respects to the here. Now we've got a body that finally gets below it. So is this just a run on stops here and run down here inside a little tiny fair value gap there? We're back into the threshold of this order block right here. And now we're reacting off of it. So is this going to stay open? If it does, in the next hour it comes back up to it, we could get in here, here, or here. Stop loss goes just above that, and you're looking for downside prices. So far that's forming the way we want it to. It's going to take us another couple of hours before we realize how that's going to end up. This one's not doing anything. Into the price imbalance right here. Order block. Now do we get a reaction off of here and start coming back into the range? No idea. So many things that can be. We're pulling off of there a little bit now. Let's leave that on the hourly because I think that's the play today. Oh, look at that. Talk about precision. Our paper trade is panning out.
I thought you said short that.
Yep.
Wasn't that?
Yeah, that's short. Right there.
Oh, okay.
What are you aiming for here? You see how this look for that. I want to see if that's the price leg we're just looking at here. It's a nice big deep retracement right back into this fair value gap. You leave a piece open, so that's the breakaway gap. Come all the way back down inside that. Leave it open. And your Puff the Magic Dragon play that you just did earlier. It was just like you were hallucinating, man, but whatever it was, it panned out. I'm trying to look for what was, if there's anything there on that 1725. Well, there's a fair value gap right there, but it never came back into it. So if you were looking at getting in, oh no, you're looking at 1725. You got in here. Yeah, there's nothing there.
That's what I mean. I don't know what I seen that made me click the button. 1725, 19 seconds.
Yeah, it would have been here. And that would have been, you would have got in somewhere in this, in 19 seconds, it would have been somewhere around in there.
At 21,665. Or
21,665 right there. So you would have been like halfway down that candle. Yeah. Well, I tell you something. If you're like super smart, you would go, oh, well, that's just the breaker right there. It's just returning to the breaker. We broke above it. We come back to the breaker, and I'm getting in there. That is an entry, same as this one is here. If you look at right across the bottom of it here, so look at the top of this candle. It's also a breaker. So it's the last up close candle before a run below an old low, up close candle before a run below an old low. So breakers are all the way down here. So this breaker right here, you could say, well, as soon as we get above it and we come back and find support at it, I'm going to get long. So we're going to say that your brain is so good that you saw this trade right here and you went, you know what, I'm so damn confident that I'm going to use this breaker as well. See how I look at it line up from the top there, and I'm going to get long right there. So you're going to be like super cocky and say, oh man, I'm so damn good at my thing. I'm going to I'm going to key off these breakers here, and I'm going to run this
I'll
puppy
make my
over.
own silver bullet.
So yeah, that's actually an entry off of a breaker. That's another entry, but that's like a advanced, very careful, and you have to be super precise, and you'd have to have balls of steel to say, I'm going to count on this breaker being support.
The one that breaks. Yeah.
That supports
Yeah,
price,
we're not,
and then off to the races you go. And if it does, and you were like so precise on your entry, like literally off that one there, or even you said, well, you know, I'll even allow it to come down to the threshold of this breaker, which is also the high of this breaker, which is also the perfect entry right there, there, and there. They all line up nicely. PD arrays, is this science? Is this algorithmic trading? Can you get any more precise than that? Now somebody'd say, bullshit, Darren, you're form fitting that. It's like, no, breaker, high, breaker, threshold, precision entry. And you would literally have zero, almost, you'd have like zero, whatever that little tiny mohawk is there. A couple of pipettes for a drawdown, aiming for there. You're killing it.
Well, that was a pure luck one. That shouldn't have happened.
Yeah. But hey, we can say
closed at 21,798.
21,798.
Yeah.
21,798.
33:20. 33 minutes after 20 seconds.
33:20. So you're right in here. Yeah, you would have got right off.
Look at all the extra I missed, but gladly missed because I shouldn't have been in the trade. So
we're going to say you went off the breaker.
Yeah.
That's how we're going to play it. Kevin's a breaker, man. He's a breaker entry boy. All right, so we got another break-in structure, fair value gap, entry, short. But our objective has already been hit. And we're coming back to breaker again. So do we run further into here? Those are all up candles. This would be a nice place for it to return to. Leave that piece open or leave that one open. And then continue on the downside. Where are we at? 17. We're kind of at 18. The reversal candles coming up. See how it's come down? The bodies drop below this fair value gap. So we have a BISI drop below, and the SIBI actually drops below this guy here. So now this creates this as an inversion fair value gap. So as we come up into it, we hit it right here. That's the edge of that inversion fair value gap. We're hitting it again. And look at that. Another example. So that's our other paper trade on stop loss would go just above here. I'm going to put the stop loss up there. Just above that. There. Because if we run back up and we start filling this area in here, I don't want to see a body get through that. So now if this is validated as an order block, come back up, tag it, body, threshold. I don't want to see that going. I want to see it just get some legs here and start to run. But now we're filling this fair value gap in here. So we may come back up and run into this one more time. Where you see we're already through the threshold.
Get my FIB out here.
50% puts us right on the middle of that new week opening gap.
So did it just jump up, grab some more liquidity before it?
Yeah. So this is that.
Fixed?
There's that inversion fair value gap. It hit the top of it right there. I want to see this. Actually, you should put the stop loss right there. I don't want to see this this one get hit. I'm gonna short that there. Put my stop loss right there.
Lower this one. 873.
That was the 50% of the range right there.
Our high of this candle is 878.
878 of this one.
Yeah.
878 open high. I've got 21,900 for mine. For this guy.
Oh, I'm on the current candle.
Oh, the current one?
Current candle, yeah. And I was checking it with that. Oops, I'm back here. 43rd minute candle. Which is 873.
Well, see, this is not looking so good yet. If they fill that, that's fine. We return to breaker. Guess you can pop up into there. I don't want to see a body start to eat through this though. We'll see how that goes. I haven't even checked to see if anybody's even in here with us today.
I've been checking.
Oh, no, it's just well, that's the fill. I'm out. Yeah, I'm out. I don't like even the fact that that's popping up there. I just want to see that kick off of that and then we'll start running down. So here's the next level then. Our paper trade fair value gap's about to, our stop loss is about to get hit. It did hold.
Oh.
The bodies are holding it. It's the wick that does the damage. Gotta stick with my rule though. So let's see a body going above it, I'm out. Now what I want to see is this thing actually, now that bodies are respecting, see how the bodies are respecting the top of that inversion gap? I want to see the bodies now, this thing with some power, some legs to start really pushing through this and start blasting through the bottom of this level. If it doesn't, we're looking for this one up here. And if you lose the top of that, well, then we've got further upside, and we've got much more upside to go to. So that looks like it's going to take out the stop loss. So your paper trade would have been a no-go right there. Delete, done. So now you're looking inside here. %. Now look at the optimum trade entries. They're all sitting around 70, 75, and 79%. So we'll see what happens. Well, I saved my stop loss before it got hit. Once that body gets through there, like that, as soon as it started working through there, I'm out. It would have taken me out there anyway. We're inside optimum trade entry. Institutional order flow entry drill. Stop loss would go here if you're doing an institutional order flow entry. Stop loss is there, and you're looking for your first exit down here. If you believe this is the turn. And so far we've got a higher price leg that's due up here. Not too much further yet to fill that. We still have this fair value gap here. Look at that. We're sitting inside this 1 hour. We hit the bottom of that, almost hit the bottom of that inversion fair value gap here. Sorry, not inversion. That would be that's just a SIBI that hasn't been filled yet. So we're still on the SIBI side of this. So do we come back down into here? Now that we've had a body break through this fair value gap on the daily, I've returned to the body and then start pushing back up. Even though there's no fair value gap. Now if this stays open here and we get support, we get a little fair value gap that forms here on the hourly. In between here and here, we come back on the next hour, tag the bottom of it, leave it open, and then start pushing for higher prices. That would be the next objective. We're definitely going to hit this price leg here. Okay, so that's what I think is going to happen there. This might provide us a level of support now. See, now we've got a body above it. Now we're finding support at it, right here and here. We've hit the rejection block already, so we've eaten all through this mean threshold. So there's more potential for upside. Now, did they give you your, if you're making profits on your account already, do they not give your percentage of your profits as well as your refund?
The first payout, you get the percentage and the refund.
Okay, well then you just made a little bit of money off of your $600 gypsy run there.
Yep.
That's good. Does that bespoke work only in America, only in the States?
I don't think so. I think. Check where we're at. I don't know where they're. A lot of them are all in over in Europe.
Oh yeah. It's the ones in Africa you got to worry about. Those Nigerian ones take your money like crazy. I think a lot of them have a tax. That's a tax haven, and you can't extradite if they screw you over or something.
Probably, yeah, definitely. So many princes and so many emails. So.
That's right. Yeah, not very clean this morning. How's our... No, that one's still working out okay. Oh, look at that. There's that other discussion we were having about coming back into the midpoint, or coming back into this one more time. So we're back into it again. Stop losses here. But it's so choppy right now. This midpoint would be my exit. If I was in this thing, I'd be like, I'm out right there in that threshold. You've already come above it. We've already been inside there. Or at least take a portion off at the open and then the threshold. 50 and 50. Stop loss moves to break even. Trying to trade a consolidation like that. $11 pips. What's gas doing? Finally, it's bouncing off that area. It's good. New Zealand dollar coming back into here. Are they going to start to degrade? They're coming back up one more time to hit this and then degrade. 50%. That's a lot of liquidity sitting down there now. Okay, here's our second hour. So we're looking for a run up into here and then start burning it down. We're so close already.
Gold's gonna have a gap in 3 seconds when it's closed.
On the 5 minute?
5 minute, yeah.
Yeah.
But it's choppy.
That's got that. There's a fair value up there. That's choppy because you've already run the high out already. So the next place to run to is this fair value gap fill right here, which is just above this high. So your stop loss would have to sit down here. You got a fair value gap below a swing point. Highs taken. Yeah, it's a bit choppy for me. couple of stealth plays today. That's about it.
Yeah. And luck ones.
Yeah.
What's Euro doing here? Right all the way up.
Oh, I don't want to take down there. Euro. Here we go. So you want to see this stay open here now. See how there's a break in structure now? We got a fair value gap occurs above this structure. I want to see this stay open for the next hour. Look at that 911. My brain just picked up on that down there. It's 911. And I want to see, I want to see that stay open. Have a small little candle here for an hour. Open up, come down, just tag the edge of it, which is the top of this old high back here. That would leave that open, and then a continual run for this, all this liquidity up here. That might be a nice little play for the next hour or so. I like that. Mind you, stop loss has to go below the threshold of this candle. And if you see it eating through it, if it eats that, if it just even completely tags that and starts eating into it, I'd be like, nah, I'm out. Because I want to see that stay open. That's the rule. You want to see it stay open. And the only way to know that is for this candle to finish and then start breaking above its opening. So as soon as it comes down, tags this, and then breaks above its opening and continues to move up, then you say, great, now I'll go back to the 1 minute and find it a silver bullet entry to get long now for these runs above. So 5 minute, keep your eye on this guy now. So here's your range. That's the one we don't want to see it get any further. Past. Wicks. %, puts us right on there. %, puts us right on there. Wicks or bodies, take your pick. $62 puts us right back in here.
So hit that and then bounce back up.
Well, here's your 50%. Here's your 62% right here inside this. If we leave that, if we just hit here and leave this piece open as a breakaway, I like the fair value gap. Doesn't quite get above the structure, but this one is definitely above the swing here. So I wouldn't touch it till at least gets to 50%. It could just come down and tag this and leave. But you want to get at least a, if you're going to go in on this, you want to go in on a discount versus a premium, right? Inside that range. So 62% puts us right at a fair value gap price imbalance. But if you're looking at a breaker, this breaker from here to here provides a level of, it's also the 50%, also inside the 62%. So even that breaker itself can provide support to continue on the upside. And if it does, then you're looking for this. Then I look for price legs. Oops. Right? So I will go long right there. If I don't get it, I don't get it. I don't care. We'll get another one another day. But I'll go long right there. And my stop loss is going to go tight right here because I don't want to see this lose. If I start to eat through this, then I'm out.
What's that midpoint there? 105.377? Like
this one right here is 105.379 for me.
79, okay.
And right on the bottom of that is 105.375 for the bottom of the price imbalance. On the 1 minute, what does that look like on the 1 minute? This is that little price imbalance down in here. Equal highs, top of the consolidation, return to that, tag that, and leave. So this is all doable here. That's a downside objective. There's the first one, touching. Now I want to see the start. This is the time I want to see that one just kind of eat through, aim for a lower objective. But if it just bounces off of that and leaves, then that was the higher time frame inversion fair value gap that we were looking at, providing support. Or fair value gap, I think. Is that the inversion or fair value gap? What was it, 5 minutes? Oh, it's just a fair value gap. So it can provide support and leave. Then you'd have to change this price leg to the edge of here. But we want to see it dig in there. So that was just the pop below into that fair value gap. That's all that is necessary to turn that and run it all the way back up again. I'm just looking for a discount. I want a discount. But that is an entry right there. And it's Monday, so we got plenty of time, and we've already killed a couple of other trades, made some cash already, so it's not a high priority trade.
So now those candles to the left there at 850 and 855 that form the breaker, isn't half of that premium and discount? So wouldn't we be in discount right now?
Yeah, no, I'm looking at the range. You're right. There,
Oh, okay.
you can split that, but you have to say to yourself, yeah, they're premium and discount, but ask yourself, what part of the range are they in? So right now that is in the premium side, and you could say they're a premium discount inside a premium. So you're still saying, oh, I'm going to get a discount of that range, but I'm still inside the premium of the big range.
Okay, I follow. I see what you mean. I was just looking at the breaker discount premium, and you're at the whole range.
Yeah.
And then you zoom further out than
Yeah.
need to learn to do. Okay. I follow.
So now if you get above this guy's, if we climb on top of that, then that was the low, and then you'd say, man, I nailed the perfect entry there. Because all this just stays open as breakaway gap, measuring gaps, because we ran above an old high with a body, returned back into it, hit an area of fair value, and now we're driving it through like this. Now this is one of those things that, yeah, we called it, but we wanted a discount. I wanted a better discount inside of a range. I wanted a 50% or more. And that was not even 50%. Let me have a look. %50 was right here. So now we've run back up into this area, into that fair value gap. Now I want to see that stay open, right? Or stay bold. And if you're going long now, then don't forget, if you got in on this here, look at your scale outs. If you're looking for quick scales, PD array above you, what PD arrays are above me that I can start scaling out at? Well, there's a fair value gap here, so I have to scale out there. So you're literally taking 3 pips, 5 pips, and then 6 pips, and then leaving either more for running above and move your stop loss to break even. Because if this turns around and comes back down on you, you missed an opportunity to start scaling out a little piece of the pie, a little bit of cheese there. Because this, once you got below it, all you wanted to see was just a return to the edge of it, provide support, and then continue on the downside. But it ran all the way back up, almost closed it in to continue down on the downside. But if you look at it, this is why I cut through candles. So we're looking at this providing support. But if I cut back through candles and I see this right here, there to there, that is another inversion fair value gap. And when I draw it across, you'll see why it also becomes an area of sensitivity. Boom, right there. It tags it. This is the fair value gap inversion. This is a SIBI being filled. But this is the inversion fair value gap that provides us support, because now we've eaten through it, we've come back into it, we've come back into it, we've come back into it, and we've tagged the bottom of it. Now we're leaving. So now we're still looking for my downside objective. So that's what we got support of. So you have to, when you look at these things, always say, yeah, that's that's a CIBI. It's not an inversion gap yet. It's just a CIBI that hasn't been filled yet. But we do have an inversion fair value gap here, and that's just on the edge of the CIBI. So look at that as a potential place for it to return to. Also inside that, we want to see that let's stay open to continue down. That would be a breakaway gap. It's a small little piece left inside there untouched. Now you don't want to see it come all the way through it, start eating through it. Then you start to think, okay, that's not holding price. This is holding price. So now you can see where you're stuck between here and here, between those two. And if you're scalping, I've got no problem with that. Just scalp it and be content to nibble a little piece out and say, well, I am stuck between these arrays. So it could either run up or it could run down. So as Michael says, if you can explain both sides of the market, you shouldn't be in the trade. Or if you're in the trade, make sure you're taking your PD arrays as quick as you can and nibbling your little piece of cheese out of there. And then you sit on the sidelines and say, yeah, I stole some pips out of there. I was aiming for a PD array, so it's reaching for specific spots that were premium above me. I'm in a discount, so I want to reach for something above me that's in an array that I can take a chunk out. I will, and I'll move myself to break even. So now I've got a zero stress trade. I take 10% out. If I can get another piece off there, I'll close a huge chunk out of it there, just because we're stuck between these two. If it hits that there off of that order block, which is really a breaker because it's the last up close candle before it runs below this low. So if it runs up and tags that, expect it to come back down. So I take a big chunk out there as well. And remember, you're only making 6 pips. Do you want to stress yourself out over a trade if you're going to only make 6 pips? Well, at this point, if you've broken even, it won't matter, right? It's a zero stress trade. So you're like, I'll take 6 pips if it comes to me.
Yeah, 10 to 15 is better.
Yeah, 10 to 15 is much better. So while that cake bakes in the oven, what else we got over here? Again, we have a body that gets above this. Fair value gaps below it. Consolidation more likely. Or do we have a reversal happening? Because we're starting to get into the bottom half of the hour now. 27. So between 27 and 36, be careful. That's all I can tell you. 27 and 36. You can get these little reversals that can happen before they continue on the upside. There's 32 is all going up, then it reverses, then it goes back up, 35, 36. So 27 to 36, I'm very cautious about what I'm looking for. So I look for, it's almost like another new wick on a 30-minute candle. That's the wick happening, and then it will continue pushing through for the last 25 minutes of the body of the candle. So there's 27. Are we going to eat through here, come back up, and then finally get a new fair value gap that moves us in the opposite direction? Or are we going to break down below these lows, get a fair value gap, and then start running back into the range? We're in the 18 candle now, so that's usually the reversal candle. 18, 19, 18 reverses, 19 reverses the 18. Well, how's our Japanese yen trade working? It's still waffling around there. Yeah, you'd be up almost 20 pips already.
That's one I never even traded or I never even looked at.
What's that one? This one?
Yeah.
Yeah, we were just paper looking at that. I just threw that in there because my buddy wants to do something with a Japanese yen with the Canadian dollar. So I just looked at that. I was like, oh, there's a trade right there. or an entry anyway. And for you, that's not beneficial down in there. You get taxed higher on that, just so you know. You need anything that's paired up with the US dollar is better tax break for you than going these exotics like Canadian, Japanese yen and that kind of shit. You always want to make sure it's attached to an American dollar. That way you guys get a better tax break down there. Body respecting this guy here. Mohawks can do the damage. Is this providing a level of support? Right there. Is it providing a level of support? And we're going to start breaking down and reaching for this lower time frame objectives. That just rolled over right now. That would be a nice little run down into here for 73 pips. Or 73. Yeah, 73. And in gold, that would be huge. Is that going to degrade? I'm going to put a pretend paper trade on that. It's not an entry I would be crazy for, but you're entering in here. Stop loss is super tight. Actually, you know, you probably put it up in here, just above that spot right there. Oops. Nope. Pull it out. Done. Paper trade's done.
In and out that quick.
In and out that quick. Don't like it already. Yeah, don't like it already. Even though this is going to be a wick thing and it roll over. Once it's already wicked through it, I don't want to see it start wicking through it again. If it's got any legs to get out of that, you don't want to see this kind of stuff. And it may turn around and go all the way back down now, and I go, I don't care. My rule is if it's starting to eat through this wick again, it's eating through this. It's already hit that objective. And it's hit it a couple of times. I've allowed it to wick through. It came in, popped in, tagged it one more time. It's like, no, I don't want to see it go there one more time. If it breaks above that, forget it. It's not got intentions to get back down here yet.
So then the same thing on the euro then.
Euro.
Right? The 20th and the 30th minute?
20th.
Looks like it's going to...
And the 30th minute. 20th.
Or on the 5 minute.
5 minute chart, yeah, right here.
Yeah.
20 and 30. Yeah, see that? You don't want to... Don't forget, this is still open though. When we looked at this one here, see how that has all been filled already and the bodies are fully at the top of it? It's like, okay, now you've filled that in. If you have intentions of leaving, get out of here now. Versus it's not filled. You can pop up into it one more time, which it did right here, because if you look at the high on your candle, on the 20-minute one, your high, mine is 54.85, and you watch this one here to be slightly above it.
1 pipette.
Yeah, 1 pipette. So that was just enough to tip above that. Now we should see it, a run. I don't want to see it drive back up. If it does and fills that, there's less likelihood that it's going to push down, because you want to see this remain as an opening gap. And let's get some legs now, start taking off. So if it even ran back up there, if you're entered in on this, you put your stop loss up there, you don't want to see it come back up there again. If it does and starts eating through this, you're out. Well, I would be anyway. But your first objective, first swing, I know it's not much. There's 3 pips, 6 pips. Anything of value is down here, 8, 9, 10. This is quite a ways down there. Now, if it's got intentions, it will just start going, not rolling slowly back up again. That's not a good sign. You want to see it with intentions now, like, let's go, get some legs and get out of here. Especially keying off of these candles now. You've come back up, you've hit your rejection block or your inversion fair value gap. Great. You're hitting the bodies here now. Let's just get out of here. I'd be out. That's not even looking good. So look for, if it does fill this, your threshold is your line in the sand. Some people are saying, no, I want to wait for a premium inside this small range here, a premium to go short below here, right there. So you enter in there. The threshold is your line in the sand, which is hit right already. Now you want to see it go, I'm out of here. Big wick down now. Nope. Still hitting the line in the sand. It's also hitting the midpoint of that. No. So many reasons I would have pulled out so much sooner. So you see how if it starts to go back up again, this is the kind of stuff, the kind of crap you're going to see is it kind of eat through it, right? I want to see legs down. And as soon as you see it creeping back up, that's not a good sign. Just bail out of your trade because you're just trying to collect 3 and 6 pips. You're inside consolidation. This is where you get beat up. If you don't know what you're looking for, you just get the crap beat out of you because you're in a trade that's not supporting a nice good drive down. And if you see that popping back up, slow grinding back and forth, and it's eating through PD arrays and it's not driving for the next one, just stay out of it. Wait for something more juicy. This has been super high resistance crap all morning. So, and it's Monday. You don't even want to be mucking around inside a market on a Monday. Here we're back into that order block again now. And it's mitigation because it's the last down close candle that, or up close candle that does not break an old low. So we're mitigating off of this. We could come back here, mitigate off of it, and start coming back down again, which is also at the top of the inversion fair value gap as well. So you're between this order block here now and that guy there for your little tiny mini range. So if you hit off of that, you turn around, you come all the way back down to the edge of this here. Also a new inversion fair value gap that's occurring inside here. So this guy here would move to something like that. So you see how it can start getting really kind of sloppy in here. You go, shit, which one do I reach for now? These guys are starting to overlap each other now. So you see how the PD arrays just start to compress and they just beat you up inside here, jumping from one to the next. So between here and here, and that fair value gap on the premium, this fair value gap on the discount of that small range here, you wait for it to take off because right now it's just getting super sloppy. You can still read the PD arrays, but you got to be like laser focused on what it is you're looking for. There's the PD array right there. Pull back off it. Look for this one down here. Inside this, unless this one here provides support and decides to leave now. We have a slight body get above it, so we just dipped into it. We've tagged the top of this one here, so now we should see this start to push up higher. it doesn't. It's coming back in here. So
Coming back.
yeah, so back to this guy here then. Discount array. You see when it gets into this high resistance stuff, it gets hard to call. It really does. There's the midpoint. On the seconds, that is pulling back to another premium array to push down to a discount array or whatever. So that's why you see it's sensitive on this 5-minute time frame. So it's pulling back inside lower time frames for its fractal highs and lows inside that little range candle, right? Everything's fractal. Everything's going on between higher and lower time frames. What we're looking for here is just bopping up and down on the hourly. It's just going bip, bip, bip. But now we know what it's doing down on the 5-minute. It's looking for its own set of PD arrays and so on and so forth, all the way down to the 1 second. So now does it push up because it's come back down into the 50% of that range? Now do we get the push? And then the next PD array above it is here, here, and then the rejection block. Wow, it's like watching paint dry, hey? It's terrible. See, there's just no momentum, right? So this is one of those ones you go, fuck, this is not moving anywhere near the way I want it to move. Move to the sidelines, go from today.
Yeah, nothing's moving. Gold's not even moving. Nasdaq's not moving.
So this is where you kind of look at this and say, is this the wick? This is a daily candle for me now. Is this the wick of the week? What PD arrays are we reaching for on the daily that would be a great place for a wick to end up and then start getting a body of the candle starting on Tuesday and Wednesday? We start to get a real body on Tuesday, Wednesday, and then the Thursday, the Friday is the wick of the bottom end of the candle. The Thursday is the big reversal body. Tuesday, Wednesday could be the high. And then we got all the way down into the Thursday reversal. So what in here looks like a great place for a candle to stop. Eek, what a mess. So we're looking for, there's 50% of that range. Is that right? What's that one? No, it's 50% of this range. What's this one? Stand by. Let me get that out of there. Delete. So from that high to that low, which is last week's high and low. 1, 2, 3, 4, 5. Yeah, that's last week's high and low. So we're hitting 50% of that range. Would that be a good place for a wick to form? And this to remain open, because we have a break in market structure. Oh, no, we don't. Market structure is down here. So we have inversion fair value gap right here. Between that one and that one, there's a little inversion because we've gone through it. We come back into it right there, just above 50%. We could have, we've just popped into this fair value gap here. On the daily, we've run into the midpoint of that. So 50% of that also is the 50% of the range. Confluence. We have overlapping confluences now. So we see 50% is 50% from there to there, and it's also 50% of it from there to there. They tend to overlap at an area that we could expect some nice turning. So is that the high of the week? And now do we turn around and make this big run down below here and get right back down into this lower time frame order block down here? And we know there's something down here in the hourly, so that would be the threshold. Let me get all my trades off here. So you're looking at the threshold. The body of this candle hasn't been hit yet, and the threshold hasn't been hit yet. So have we just... Is this my projection? I'm going to make sure I got that one out of the way there. Delete. So we could get one more push up. So Monday, Tuesday makes the high of the week. So look for that 50% of that range, the high of the week. Even if it returned to the bottom, I'd like to see that stay open in order for it to go down low now. If this was the 2-minute candle or 5-minute candle, we want to see this fair value gap stay open so it can continue running. So we just run back up and just pop into the top of it, or just into the midpoint, which is that 50% again. So that's where my eyes are going for tomorrow, and then push down for the lower prices. So this would be a nice run for us tomorrow. If we catch a nice 50%er here, and we look for a fair value gap to occur with a break in market structure on the 1-minute or the 5-minute, and we get a silver bullet entry during New York Open tomorrow, we might actually be able to catch that point there for a reversal, and then you keep it in for the whole day, and we might actually get a nice little run back into here. That would be a nice huge run. That'll put some shekels in your pocket. Yeah, I like that idea tomorrow. Good, so we want to see this kind of hold price now. We had a little bit of a wick to get down there, that's no big deal. We have an inversion gap here, and we have a fair value gap fill right there. Now you want to see this one kind of just stop, tag the top of it, and start pushing back up for the next hour. This would be the 18 reversal. This is the one I was telling you about, the 18 reversal, 19 reversal. So I want to see it get 19 candle in the next 10 minutes or so. Yeah, this is what you want to see. Now you want to see it run the next one kind of pop up here. This one finish up in here somewhere, and then pop down, tag this, and start running back up again. Oh, this is a 5-minute candle, so there's not even an hour. So 17 run, 18 reversal, 19 reversal again. Good. That's exactly what you want to see. Now you want to see it just pop down and tag this.
Leave a little bit of a wick, bottom wick.
Yeah, and you want to...
There it is.
You want to see it just come down into the bottom of it here on the top of this inversion gap. You don't want to see it eat through this. So basically it would be a drop an order in here, stop loss goes here. If you lose the midpoint of that again, it could come down to the midpoint, but if you start to see it eating into the bottom of that, get out before it runs here. You want to see this inversion fair value gap stay open. not really any rule for specifically other than just keying off of inversion or fair value gaps. It's not an inversion fair value gap yet. It's just a fair value gap because we went through it. When we come through it and then come back to it, that creates an inversion. So we're just coming back to tag. Well, now we've eaten into it. Do we get some level of support above it? And that's only 7 pips from there to there. Four pips to there. What's this one on here for?
I think that was the original down leg that you had targeted.
Oh, for the downside, okay. And then we're going to
Yeah.
look for a run back up, okay. Well, that still looks good because there's a price imbalance there, there. Now you want to see that blast through there. If it doesn't, turns around and comes back down, then you're looking for more. Digs into this. Then your my eye goes to that original idea we had here. So now we're between these. We're still in a premium of this range. And we're now bouncing around between a discount inside the premium. So don't forget, in Michael's teachings, he teaches from the bottom to the top. You split that in half. That's a premium and a discount. Then you split it in half again, and that's a premium and that's a discount. And then you split that again in half, and then that's a premium and that's a discount. So depending on what type of range you're working in, you're saying, well, if that's a premium and discount, then I have to be saying I'm looking for a pip haul between wherever that low is and the high is. I'm looking then that for my discount to premium range pips. That's it. I'm not looking for anything else. I'm inside that range, so I'm trading from premium to discount inside here. I'm not trying to aim for down here because that's not the discounts and premiums I'm aiming for, unless it's something specific like I'm aiming for a fill of this and then aim for a lower downside objective. So that would be a perfect fill for a short.
No, I just flipped over to the pound and I just see it keep rising, rising. I'm like, oh,
Yeah.
I only kept the runners on my accidental.
Yeah.
Shouldn't have entered, but
Your laser focused breaker entry right there, that's your huge focus. You would be like,
and look at it.
you'd be like,
Still going up.
bitches, look at me run. 32 pips. I knew that was doing this, man.
What did I close it at?
Well, there's that price leg I mentioned earlier. So we're fully done that price leg. So even that price leg itself was a dandy. Okay, I can get rid of that now. Yeah, that was your entry right there. So that would have been like
665, and look how I'm out at 665.
Yeah, that's you would have got you're in right on this one here. At 665 would have put you right there. Right off the top of that breaker. For a run up.
This is why I don't go back and look at previous trades of if I stayed in longer, this, that.
Oh yeah,
Nope.
you don't want to get into that kind
Cut
of
it out.
psychology,
Yeah.
because then you start beating yourself up, and then you end up forcing yourself psychologically to make a decision that is outside of your general rules. Just say, hey man, I nailed that. I had Lady Luck hold my hand all the way to here
Yeah.
and say, follow me, little man.
Yeah.
Here's some candy. Follow me. You follow there. They'll say, wait. You're a stranger. Let me cash out. Leading you to the promised land, not the place you
Yeah.
want to be, man. So now let's look for this objective down here. Our original idea. Let me just shrink that down a little bit. Yeah, so that's a deeper run into there. We wanted a discount. That's what it was. We wanted a decent discount for a run back up.
Might get it just in time for lunch session to end.
Mm-hmm.
You know, it's gonna slowly work around here, tag it, and then lunchtime, take back off.
Take out the highs, yeah. And because think about it, if the pound is on the way up, what does it do to the euro? Euro tends to follow suit,
Follow, yeah.
right?
The euro is obviously the weaker sister today.
Yeah, for sure. Well, if the pound can stay lifted like this, then this is maybe the entry we're looking for a run back up. Now, why is that not 538 105? I'm trying to find my entry here. 105.3. I'm trying to put a pending order in here and it won't let me do it. I don't know why. 105.6. Take profit. 105. There's something wrong with this entry. So see where it is.
I was talking. I was on mute. How's the PM session usually? I've only traded that once. It was really slow. I think it was like a Tuesday or something.
Yeah, that's.
I usually sleep by then. Is it usually like a lot slower, less volatile, or is it kind of?
Oh, it can be quite crazy when you look at it. So your PM sessions look like. If we go back over here, the 2100 hour. Somewhere around the 2100 hour mark. Let's go in here. There's your 15. There's your 2100 hours is your reversal. That's the PM session. So 21 to 22. If we go over to the previous day, 17. There's 19. There's 21 to 22.
Oh, okay.
So those are, and if you think about it, what's it coming back to? Area of liquidity right here. So right at 2100, if you can say, I'm expecting a turn around 2100. And is there a PD array back in here that's in a discount in a range that I could get in on? You're looking at precision right there. Boom. And if you're aiming for the higher time frame, here's my range again now. Don't worry about this range. Look at this range and say, well, what's a premium? If I've just got in here and I'm looking for a run up and I see this and it comes back down into my order block. So I've got order block validated right here. Let me make this bigger. Where's the 2100? Right there. So we have an order block that's validated right here. We come back, we tag it, and we even come down to the body. We tag the body, and we start to leave. What's my higher time frame PD array inside here? Pull your FIB tool from the top to the bottom, and then you'll set your objectives for your exits. So now that you can get in off of this guy here, if you didn't get in there with confidence, you say, well, I wait for this order block to get validated. It did. As soon as it comes back to it, I'll take here, here, or here. My stop loss will go right below my low here, because if I'm wrong and it starts to eat through this, then whatever, I'm wrong. But if I'm right, then that's my PD array matrix that I'm looking for here. So now I want a premium. So anything above here, I'm going to start scaling out. So you start to say, I'm going to scale out 12 pips. Here, that's 50%, then there, so that would be, if you entered in off of here, let's say, or you got really afraid, you'd say, I'm going to get in there. So there's your 6, if you're in that one, 9, there's 62%, there's 12, 70%, 14. If it just keeps hitting your PD arrays, you just keep hitting them. Then you look at that there, that's the breaker, last up close candle before run below, all these swing points here. So that breaker right there, you say, I'm going to scale out at the middle of it, which is, 75% is the body perfectly. And then you can say, I'll take the midpoint of that, which is right there. You would have had like freaking laser precision, and you would have scaled out all the way back up before it turned around and raced all the way back down to you again. So that's an afternoon way that you can run that. It's just look at the overall range that was created throughout the day. Find your entry. If you're pretty sure that's going to be your entry, you drop it in there. Put your stop loss below it, because you don't want to see it reach down any further than that right there, which is also that inversion fair value gap that occurred here. See it right there? Bodies respect it perfectly. Also inside the fair value gap here. So it came down, rebalanced this, came back inside that inversion fair value gap right to the bottom. So if you decide to get in there, stop loss.
So are you looking at the midnight hour or just the session itself?
For
your overall run here.
For this run here?
Yeah.
Yeah, so you just look at the range you just created, not this whole run here, because this whole run here is its own fair value gap, or sorry, its own range. So if I pull from there to there, look at this, 62%. Perfect. So if you're saying if you're getting in off of this fair value gap fill, which is in this range here. Like if I pull my FIB tool from here, you'll see how it always works so beautifully. So watch for the return. Optimum trade entry. If I'm looking for an optimum, what PD array in the premium part of this range supports my potential for a reversal? Well, a premium 75% optimum trade entry right there. 79% optimum trade entry is perfect. Bang, hits it stellar. Then you go, all right, now let's pull the range from here. 62%, bang. Now pull the range from here. 79% retracement. So is this random? You can't believe the precision that I've just showed you right here.
Yeah, wow.
Stunning, hey? So that's why I love Mr. FIB, and why you can use FIB to scale out as a means to scale out, right? So always think about ranges and say, where am I in the range? What on my premium portion of my range is a PD array that I can think? And now here, look at this. This is a good example. So here, this is a discount. That's below 50%, so it's a discount area. So if that's where you're aiming for, which is if my entry was right here off of this guy, and I'm looking for this new range here, and I say, well, I want to get into a premium in my discount. Here, I'll show you. This is what I mean. So there's 50% right there. That's 50% of that whole range. So look at this. 70% optimum trade entry inside when I talked about premium to discount, and then inside this 50% is a premium and a discount. Well, there's your premium, right? Of that small 50%. There's, look at that, right on the money. Hits it, and we pull all the way back into this range. So if I come back into that range there, from the top to the bottom, oh, let me pull it around the other way. Watch this. Optimum trade entry. Bang, 79%. From there to there. And then we start to run back up. We start to extend. We've eaten up the 50% inside that lower half, the discount, premium discount. Now we're extending up into the premium of of that range. Does that make sense?
Yeah, I get it. Yeah. Wow. Wow.
So I'm trying to show you a level of precision here that is... this is not random shit. When people look at these candles, it's crazy.
They lined up. It's perfect.
Yeah. So when you look at this kind of stuff and you look at these ranges, again, people look at this stuff and say, that's all random shit. You say, no, I can show you why that is so freaking precise. Like, I wonder, I'm just curious here. If I pulled Mr. FIB tool here, from here to here, and then I go like this, I just want to see if this is how accurate we can make this from 50% right there. Let me delete this guy. There's our that's 50% of our range. All right, now if this is premium and this is discount, I want to say pull my FIB tool from that would be 20. So if I go from here to here, that's the same damn thing. So that's premium, that's discount. When I ran back inside this half of this range, say if I split that range in half and said, now there's a premium and discount inside this half of the discount range, okay? That is also broken up into premium and discount. So when I retraced, look what I went to. I went past, so I go from here. This is how I have to pull this. I have to pull it this way, from top to bottom this way. And look what happens. So I go from, this is my discount range, and I look for the premium and discount inside the discount range. So I started here, I came back up 62% inside a fair value gap. And then I pull back all the way back into the discount of this premium discount. So if I take half of this, so now this is another premium and discount of this discount premium range. So I split that in half and I go, okay, so look at that. There's 50% of this big range. I got above that, so I got into a premium. I sold things at a high, and I'm buying it back down here at a discount. Also inside a PD array order block. And then the final pushback out of that range into above my 50%. So now I'm back into the premium, and I'm going up into the higher premium of this range. So you can see how it's constantly seeking liquidity. So people say, well, why did it run up in here? Well, because we're in the discount of the discount range, and we're looking for a premium to a discount, and then we're running back up again. So that's how those kind of how the algorithm's looking. So when you see these little runs back to here, well, we're in that lower half. We're in a discount, so it's trying to find a premium inside that discount to unload it at a discount inside an order block and then make its move up. And if they have confluences like daily, weekly, hourly fair value gaps that overlap, then you're just even more reason to get in. But anyway, that gives you an idea of what it is we're looking at. And then we get into this kind of, the stuff we're in today, where stuff, let me get out of here. What's this one?
Now, oh, you're on Euro. I'm on the pound, and we're right now hitting where we were Friday before the down leg of all this started. So we retraced since Friday.
So yeah, remember we were saying that we want to see this stay open now, and we want to see this push for higher prices. We're aiming for up here, that fill of that thing now. So basically, we've got what we asked for. This is staying open, but we didn't get an opportunity to get back on right here. There's your fair value gap. We want to see it come back, tag the edge of it, so we can get long on this to fill this. And we're not getting that opportunity. It's leaving. But that's fine. It's still doing what we wanted it to do. So the arrays are working out and the setups are working out. It just didn't give us an opportunity to get in. But that doesn't mean it's not going to come back down here. Yeah. Now that it's hit that, made equal highs there, is it building liquidity there one more time as a ceiling to come back down? Does retail look at this as a ceiling? And it starts to come back down, giving retail a false hope that we're actually going to come back down into a deeper range. And then we go, nope, it just comes back in, dips into this, and then pushes right through and takes the roof out and fills in the rest of our fair value gap and reaches for a breaker up here.
That last minute candle is, or last 5 minute candle is 21,998, which is exact on the down candle from Friday at 8:40.
There you go.
21,998.
So that's the this is the new week opening gap. That's the Friday's close, and this is Sunday's open. That's the midpoint. So we're inside the weekly new week opening gap. So now do we just bang off of that and start rolling back down again? Does that provide a level of support that we're looking for now, waiting for us to get back in on that hourly? See how it's just hit the top of it? That's the new week opening gap. So, or a new week opening gap, not this new week opening gap, but it's a new week opening gap. So if we hit it and we'll come back into it right here, which is the midpoint, would be a great place to get in before it ran back up. So tomorrow we look for this to run back into here, or in the next couple of hours, does it come back into here after lunch, for example? The 2 o'clock, does it, the 21 candle, does it come all the way back down into here and then start pushing back up for the rest of tomorrow and Wednesday?
Wow, this is crazy.
Crazy fun, hey?
Like to the pipette. Like
it's crazy. It's crazy how accurate it is. That's why it's not, you won't ever convince me that this is, a fundamentals could have told you to get in at that point. Fundamental analysis says that is your entry right there. No way, man. Fundamentals never tell you an exact price to get in. I've never heard of a fundamental doing that. Right? They can give you a rough estimate, and then one fundamental guy will tell you that there's one thing, and another guy will tell you another. Same with the technical guys. You're either algorithmically trading or you're technical trading. You're doing all your little, bull candles or your bull flags and bear flags and batwing patterns and Goldilocks patterns and all this other fucking bullshit, right? So if you can't see what we've pointed out today as a level of precision, then you have no idea what you're doing in the market. You're at the beck and call of randomness.
So, all right, now I'm gonna do something because I literally just do the silver bullet. So, like trading at this hour, I wouldn't even be awake at this hour if it wasn't on the call with you right here right now.
Right.
What is the downside? It's 3 pips from where we're at right now on on the pound.
Yeah.
If you were to short this and just put a 3 pip loss just above that Friday's high
right there
before this downside at 835.
So the Friday's high, like over here, you mean?
Yeah, at 830. Where are you at? Yes, that one.
Okay. So if you're going up there,
hold on.
That's a huge stop loss. That's a 20 pip stop loss.
No. Look,
unless you're looking at this guy right here, the afternoon, like the 2100 candle. Was that the 15? No, it's a 15 candle. So that was like at 8 o'clock in the morning.
I'm on Friday the 13th at 8:35 in the morning.
Yeah, this one right here is what you're looking at. So don't forget, you're looking at this fair value gap here. So if they do run this up now and push straight into this, because they have no intentions of coming back into here, if they run this up, look for this to hopefully hold price here, here, here. If you lose the threshold, then look at these equal highs up here. What I want to see is this hold price come back down, and then we get to drive up. But what I want and what we'll end up getting, maybe two different things. This little jump, the fact that we opened and it did not come down to get us in, is a strong indication for a higher upside run.
Okay, because I'm looking at this is our third touch now, exactly at the 21,998, and this candle closes in 10 seconds.
For the 5 minute, you mean?
5 minutes, yes, 5 minutes.
Yeah, it's coming up banging off of that, right? So now it's building liquidity on this side of the things. It's coming up, touching it. So what it may do, it may just go boop, just pop above it, clean these guys out, then come back down into here. So if you put 3 pips or 3 pips above this, it may be just enough to tag you out and then run down. So it's going to be one of those either, right now I wouldn't even touch this, even though it is hitting it. It's a gamble right now. You're gambling on that price line. You're trying to pick the high, and the rule is never try to pick the high, because we get beat up in that so often. But if you did hit that right now and you said it just turned around and went all the way back down, you'd be like peacocking all around your house, and like
I was already in one lucky trade. I'm just curious because
you'd be Bart Simpson strutting
there 3
that.
times.
Yeah. So that may just, you end up getting what's retail looks at this as a tweezer pattern forming here, where this comes back down. Now, if it broke this opening, if it dropped below the opening, that might be your opportunity to, and again, this is just all bluster. This is not actually a trading pattern. 21,965. What does that sit on? 21,965. 21,965. So if we end up getting, so now you just basically look for a break in structure. If you want to say, I want to trade this now, I'm pretty sure that this line is going to hold. You wait for a break in market structure. So if we have a break down here like this and it shoots back up, mind you, that's going to be hitting that spot we're looking for. I guess if you want your stop loss to sit above here, you want to see a big bold candle come down, form a fair value gap, come back into it on the next. So 1 minute down, 2 minutes fair value gap, 3 minutes touch the fair value gap, and come all the way back down to here. Stop loss sitting above. That's what I'd want to see if I wanted to continue down, to hold that as my high. I wouldn't trust it though. It's building so much liquidity there, right? Every 1 minute candle, it's building liquidity above that, which may be great, which is exactly what it may be seeking later. That liquidity is
time.
Yeah. So if you do take it, to me it's a gamble because you have nothing.
No, I'm not taking it.
Yeah.
I'm outside of my. I do 10 to 11 o'clock. That's it.
I'm not touching it, man.
I'm not. I was just curious because like I'm seeing it hit 3 different times over the course of.
Oh yeah.
Was it 10, 20, over 25 minutes, and it literally at the same pipette.
Yeah.
So I was just curious, like.
So put a paper trade there. So just put a little like a check mark here. You know, just go into your thing and just say, I'm going to sell it right here. Break. And then you put that in there like that. That's where I would sell it. My stop loss would go there. And then you can put your little, what am I aiming for? I'm going to buy it back down here because that's going to be my long for later on. I just want to like that. And then you say, okay, now if that's my short, that's going to be my long, and for the overall run tomorrow into higher time frame stuff.
I literally do 3 o'clock to 4 o'clock, 10 to 11. That's it. Like I said, I did the 2 to 3 one time.
Yeah.
And it was slow, and I'm like, I should be sleeping. I'm like, I shouldn't be paying attention to any of this stuff right now. But that's why I'm curious with this 3 times touching, but I don't touch anything.
Yeah, I've got a buy.
So close to getting the refunds that
yeah,
I'm not gambling any oh, it's so close. Nope, not doing it.
No, you're not getting tempted.
Nope.
The taste of nuts and honey. He's not being tempted.
Nope. Not gonna happen.
Yeah, so that's good. I've got a buy order in down here on this with a stop loss just sitting down in here. So my buy is long from here. I'm not shorting this, but I've got a long sitting down here. If we come back into that in the next couple of hours or over lunch hour, and then I'm looking for a run up there for tomorrow. So we'll see how that goes. I'm going to be super picky, and I'm going to move it down to there. Yeah. Yeah, that's it for me for the day. I am pretty much done, so I will see you again tomorrow.
Yeah, I'll be on tomorrow.
Okay, buddy. Have a great day.
All right, have a good one. Thank you very much.
All right, no worries. Talk to you soon. And for the rest of you, those of you who are sitting in, still watching this or watch it a little bit later, I always end the show with the same thing. It's a tough world out there. If you can make a little money, a little more than you can support yourself. You can help somebody else out along the way. Pay it forward. Ladies and gentlemen, we're all in this together. Take care of each other out there, and we'll see you again tomorrow. Thanks again for watching.